All right, ladies and gentlemen, so we started to see that relative strength from the very short time frame come into technology, and some of that relative weakness starting to come into those names that we've seen strength for quite some time, and that happens to be healthcare, consumer staples. Hey, even over there in financials and utilities is backing off a little bit, heading toward that weakening quadrant. This is happening as we're coming into month end, quarter end, and moving into that spooky month of October. And now, while this is all taking place, some stocks are setting up quite nicely. So we're going to dive in to those individual names on today's Stock Market Brief show, but we're also going to kind of walk through what the structure of the market looks like heading into October. All that and more. Let's get into it. All right, ladies and gentlemen, welcome back to the show. Let's talk about what's going on in the markets. Today, specifically, look at Nvidia. Holy moly, up 3.96% on the day. On what news? The CEO, Jensen, from a Barron's article, said that he sold $713 million of stock, but he's done for now, and apparently that was enough to start to break from this little contraction pattern on Nvidia. It's still holding that swing low anchored volume weighted average price, which we discussed on yesterday's show, and we started to break from this trend here, and we saw some decent volume. So are we going to get some momentum to the upside in this semiconductor? Hopefully so. That would be good for the overall market. What else happened? Well, we had some stims come through from the China Central Bank, which lifted up the FXI, which is the large cap China ETF, we're just going to round it up to 10%, and then also Crane shares, KWeb on the daily time frame up 10% as well. So seeing some massive moves there in Chinese equities. However, there was a note from the Goldman Sachs desk. From what we are seeing, this is likely temporary, a 1 to 2 day bounce, and not all clear for real money community to finally re-engage in these names. But if you look closely enough, you'll see the call volume for those three large ETFs, FXI, KWeb, and EEM, which is emerging markets, which is a large portion of China. This was its fourth largest day in options call volume. So we'll see here if we can get some consolidation and follow up and play some of those individual names. September consumer confidence also fell the most in 3 years. And while the market didn't like that, you can see over here, the market was selling off. And then when that report came out, kaboom, we started to see more sell side activity. So if you were trading this intraday, hopefully you were utilizing the Market Net Flow tool. If you're in my Discord channel, you can type in the query channel and get this sent to you that gives you the idea of where cumulative net premiums for calls are and puts. And as you can see, we saw that sell side activity here in the early morning in SPY, but the market net flow wasn't all too bearish, well, at all. And as the market started to pick up, you started to see these diverge further. And as that divergence built and SPY started to see strength, this is what would have held you from shorting the market and potentially looking to buy strength shortly thereafter. And as we know, the SPY ended up finishing up at the day. Now, if we take a look at net gamma on the S&P 500, this is where it's going to get a little interesting. The main concentration right now is at 5750, and it's going to be hard to really break through that. If we start breaking through that, it's very likely to come back in and just play and pin in around these levels. That's very common. Now, if we do start breaking from that, we really want to start to see traders reach up further to 5,800, which is starting to grow in size a little bit. As I pulled this screenshot, you can see 5750. We came into and around this level. We rejected and pushed away. We started to try to get back up. We rejected. We pushed away. We did come back up to it again, and we started to push back through that level. Okay, this is very typical behavior when you get up to a call wall. It kind of just pauses price out. Now to the downside, 5,700. To the upside, 5,750. We want to get through that. And as the market is kind of putting in higher lows and testing, this is actually a bullish looking consolidation overall. And if the door opens up, we'd be paying attention to that 5,800, which is about 50 points higher there in the SPX. If we take a look at the 5-day moving average, my apologies. I don't think that that's the 5-day moving average. I think I misconstrued it there, but we are still above a 5-day moving average on the SPY. More specifically, we're starting to notice volatility come in a little bit, which is very, very common when we're above a flip line and above a rising 5-day moving average. expected moves, they tend to get a little bit smaller. You see a lot more smaller up days. And then when volatility picks up, you can see kind of larger, obviously, down days. But this is typical behavior. The market's putting in higher lows above that rising 5-day moving average. We're above the week-to-date anchored volume weighted average price. Tomorrow's daily expected move, I'm going to round it up to 574. The lower is at 569. Now, just keep in mind that we can expand through these levels. That's always very likely. But if you think of it in terms of a distribution curve, 68% of the time we finish within these levels. So it gives you an idea of what the market's pricing as far as risk. Now for the week, right? Tomorrow's Wednesday. For the week, we're looking at 578 to the upside and then still 560 to the downside. We got to be open for the possibility for price to still come down. But as it stands right now, we are in positive gamma territory. We're above the flip line, 56.60. Okay, so that means dealers are looking to buy the dip, sell the rip. Volatility typically comes in. And we're above a rising 5-day moving average, which this isn't the correct moving average on my screen, unfortunately, but that's okay. And so both things right there are good signs. So what is a potential sign of market kind of being overbought, in an overbought condition? I would go to this chart and look at back month versus front month volatility. This is looking at VXV over VIX. And when we get to 1.20, which means the back month, 3-month volatility is 20% higher than the VIX, we have seen the market stall out in and around these areas. And it doesn't mean that we can't go higher here on this level, but as you can go back through history and see, when we got very extended to the downside, we talked about it. Why? Because that's typically doesn't last for too long. And that happened to be right at around the time where we found the bottom there in August. And then we came up here, right? And we got extended, which we talked about. The market stalled out. We sold off a little bit and continued the rally. Over here, you can see that we kind of chopped around in and around this area. We consolidated before moving further to the upside. Here we chopped around for a bit and saw spikes, and then we started to move into more more correction territory, and multiple times that has been the case. So I just want to call out, we got a reading that closed at 1.20. That's 20% higher, and this is typically where you look for consolidations. Now, why is that important? Back to here. If we start breaking above 57.50, there's a likely possibility for this to extend higher, and back to the reason why I said if we get through it, right, it's very likely to pin it around. So just don't be faked out a bunch of times. If the market wants to press higher, we'll look at individual names and kind of go from there. But that would be more of the concern. Now, if we just take a look at the SPY on the daily time frame, you can see these very, very small doji type candles. This is, by all means, a bullish consolidation. We're consolidating right at these new all-time highs, right? And it's above this prior breakout area. So even if we get a hit back down to 565, look for this lower anchored volume weighted average price. If this is a cup with handle, the measured move can take us all the way to 620, but by no means is it going to be just an easy ride up into those levels. I would expect some shakeouts, some fake outs, and so forth. If we take a look at the Qs, another bullish consolidation over here. We just had a closing high that we haven't seen for quite some time. We haven't seen a a closing high that we did today since, we'd have to go back over here to July earlier this specific year. So that's a bullish shine right there as we're kind of consolidating in a bullish manner right under this 485 pivot. If we start breaking above, look for this potential gap to be filled. If we take a look at IWM right now is pulling back, and we still haven't came back into this lower anchored volume weighted average price, but you can kind of see that, hey, price action's kind of flagging here, consolidating, volumes kind of drying up. And this could be bullish in the case that we come back up to test that 285-ish area to potentially break out. So I'd be looking to be a buyer, but I'd want us to really hold this anchored volume weighted average price. So if we do crack underneath it or come to touch it, I typically go into the smaller time frames, look to see if there's strength shortly thereafter, and then try to buy into the strength and follow up through that level. Okay, if we take a look at gold and various commodities, this is also a little like what's going on right here. What is going on? Typically, gold is more of a flight to safety. So what is gold sniffing out? I feel like we'll probably find out, and we'll be like, oh my gosh, it was so obvious in hindsight. But gold breaking out to another all-time high And it's been breaking out of this consolidation pattern. We've just been seeing it ripping. So there'll probably come a point here where gold is going to take a little bit of a breather and start to consolidate. Now, while that moved, silver futures moved, and this was up 4 or 5% on the trading session today, breaking out of this downsloping trend line. I drew it all weird right here, but you can see it follow through and broke out of that with some massive volume there too, which really does help miners. So if silver is going to be continuing, miners will probably continue too, but at the moment that this starts backing off, or if it backs off and miners continue, I'd be very cautious on individual miner names if that is going to be the case. But this is a pretty nice closing price here on silver so far. Copper made a huge move, and copper does typically move with Chinese equities in lockstep because this is a very important economic metal, especially there in China. And you can see that we broke through this potential double bottom pattern, and we're going for that measured move here on that little double bottom pattern as the 200 days still rising. So copper's increasing. This is interesting to me because the Fed is talking about how inflation's coming off, but you're starting to see these various commodities. So gold, silver continue to rise, right? But this economic metal, copper, is rising. But that's not the only one. Look at things like sugar. Sugar has actually absolutely exploded in the last 4 or 5 trading days. And then look at net natural gas. You can look at natural gas futures. This little double bottom, a little measured move would come up to here. And since this low right over here, it's been about a 45-ish% increase in natural gas. And then we can take a look at crude oil, and crude oil too has been bouncing, but is this just a bounce to a lower high in the short term and potentially going to come back off? If that's the case, okay, we'll go from that point and see what happens. But if oil starts to continue to press higher, this has a huge impact on things like the CRB index. And the CRB index is a great gauge for consumer prices, right? For inflation. So we're seeing these commodities start to rise. And I think that we got to pay close attention to that as time progresses. Let's go ahead now and hop into some of the individual names that are setting up. I'm trying to keep it relatively tech focused because tech is seeing some relative strength. So we'll hop into some semiconductor names, but I got a couple other names too as well that outside of it that we'll go over that came from my tight list this prior week. Now, I first want to start with Google. Google we already talked about, okay? These are in no particular order, by the way, but Google we talked about yesterday, and we saw some weakness trying to come into and around this backtest area of this trend line and this anchored volume weighted average price. So if Google wants to make itself down here, start to see some strength from these levels, that could be an opportunity. But right now, as it stands, we're just consolidating above these key levels, and that to me, in the very short term here, could be bullish. Microsoft did come down to touch that anchored volume weighted average price, and this was notified in the Discord. This is something that I was closely monitoring as it came into the level of confluence. Now, I'm looking to see if there can be strength, right? On the near term and the short term, I took some trades intraday, and I placed them on, and I held some of it, but it's nothing too crazy because we still haven't really seen this strength yet. But as it stands right now, we are holding that anchored volume weighted average price and this prior area of resistance. Prior area of resistance can potentially become support. So now if you're looking for more of a swing trade, maybe perhaps if we get back above the 5-day moving average, or if we can break the high of this daily candle, that would give a little bit more confidence that we can come back up and retest this prior area of supply, which is roughly at around 442-ish, right around there. Okay, let's go over some other names. I want to start with Best Buy. Best Buy had a huge earnings move right here, and I've been waiting to see how it consolidates. It kind of consolidated here. We bounced up a little bit. Now we're starting to see a lower high and a higher low. And if I anchored a volume weighted average price to the earnings move, price is pretty much right there. So if we can start breaking through this pattern, that can open the door to retest this high and potentially see a continuation move for a little bit longer term on this specific trend. This is just a regular triangle pattern, but you can see its compression. It's getting tight. I would say if it do play the breakout, or if you're trying to do a starter position, I would just be watching a stop under this low, and depending on how much room you want to give it, potentially this low right here. So these are just the higher lows that I'd be paying attention to, that if they're violated or closed under, I'd be looking to potentially get out of that specific position. Now, another one is Oracle. Oracle had another earnings recently, and we saw massive strength from there too as well. It followed up, and now I've been waiting for the consolidation. I love playing these type of moves, ones that have strong earnings, they consolidate, and I look for follow through. And as it stands now, if we do an anchor volume weighted average price to the high after this earnings move and at the start of the earnings move, price right here is between them two. So if you do a starter position, I'd be looking to add on breakout to try to retest this high and potentially go further. But if it starts breaking down from this anchored volume weighted average price, I'd be just giving it more time to consolidate and kind of see how it sets up from that point. But overall, it is getting very tight and it's looking like it's getting ready for a move, whether that be up or down, I don't know. But what I am pointing out here is it's getting tighter as far as the risk. And then we're watching the trend, right? It's a bullish move. So you have the trend in your favor, which would suggest that the trends continue, right? Strong stocks typically get stronger. And the risk is mitigating to the point where, hey, I can risk this much to potentially earn this much and or even more if the trend continues. Let's continue on and look at some of these names in the semiconductor space. Giving them all, man. I'm giving you some really good names here. So if you like any of these names or if you want to see more of this content, make sure to at least check out the Discord. It's not an alert service, but it's only $9 a month, and I do a lot. I give a lot of stuff out there. Okay, so this is ARM, a very popular name. And first and foremost, let's look at the trend. The larger trend is up. 200-day, that's that pink line, that is trending up. What is price action doing? Price action's consolidating. Where is price action consolidating? Well, from this prior swing low, we're holding above it. And from this swing high, we're actually currently, which acted as resistance here, we're holding above that. So right out of the gate, below this level, I'd be cautious. Above it, I'd be bullish. And if I'm looking at this in terms of a pattern, you can see price action's consolidating right here. It's getting tight. Okay, that means what? It means price action will probably expand in the very near future because that's what assets do. It's a basic principle of technical analysis. Markets move between expansion and contraction back out to expansion again. So I'd be looking for the potential breakout of this little flag or pennant pattern, whatever you want to call it. Okay. And if it is going to break out, a measured move could be measured from the length of this pull to the breakout area, and that would take us up to and around 180, but I kind of marked it down a little bit lower just to give you an idea that there was a pretty large breakdown from this candle, and we didn't really ever go back to back test it. So if we zoom in on these levels, we could probably see a lot of price action in and around this 160 to 165 here, which could potentially act as a level of potential resistance. Doesn't mean we'd stop there, but it could end up being a little bit of a consolidation or a good area to take profit if it was to go there. Now, if it wasn't to go there, what happens? Well, okay, you take a loss, right? That's very common to happen, but your risk would be here and your potential reward would be here or up to here. If you do this enough, you can take a lot of little cuts and just get over it. And then eventually you're going to catch a winner and it's going to make up for a lot of those and some. That's just what happens. That's how you do this. Now, another thing to pay attention to is obviously position sizing. If you take way too big of a position and you take a little haircut loss over here like this, that little tiny haircut loss of risk is going to feel a lot worse if you're oversizing your positions. So don't be dumb when it comes to managing your capital. It's important. The number one rule in swing trading is to protect the capital. Let's go to ARK. So this is a little bit different of a name here. It's obviously not in the semiconductor space, but ARK is starting to potentially get more on my radar. We're starting to see the 200-day. It's flattening to going up right here. But as we started to see strength from this anchor volume weighted average price, it's slightly below us. So if we can hold these levels, we're consolidating bullishly on this trend that's acted as resistance multiple times. And if we can break through to it, perhaps, if you look at a longer term chart, we can maybe be going into a stage 2 markup, right? The markets move in cycles, right? In 4 stages. You have accumulation phase, you have a markup phase, distribution, decline. Actually, if you zoom out, ARK literally looks just like this, where it went through accumulation, it went through a markup, distribution, and we've been in this decline to potentially, it could be an accumulation phase going into another markup phase in the near future. All right, let's go to some other semiconductors. AMD, you can see prior resistance here. We mark it out to this, draw out the trend line. We look at an anchor volume weighted average price from this swing low and then also anchor volume weighted average price from this swing high. You can see it's acted as resistance. Once we got above it, we saw a nice big move, but it quickly got back under it, acted as resistance again. So what am I paying attention to now? I'm looking at this swing low for the risk, this for the breakout area, claiming back above that rising 200-day moving average, which happens to be in confluence with the anchored volume weighted average price, with the trend line, the 200-day moving average, etc. So if we do start breaking free from these levels, perhaps that gives a whole new feeling, psychological feeling to people that have been in it, or people that are looking to play potential breakouts, right? You can even potentially look at this as a double bottom over here. And this is another area of confluence here for that pivot line. So I'd be looking to see the breakout of roughly 160, maybe a little bit higher. And perhaps this stock can get going to maybe even test back up here, 180, 190. And then who knows where it can really go from that area. But as you can see, risk is getting tighter, and the potential reward, once again, is setting up to be pretty decent in AMD. If we take a look at AMAT, AMAT is another, I guess, semi-name, right? I believe so, Applied Materials. I could be wrong. I might be getting confused with something else, but I believe AMAT is a semiconductor name. Now, something that I noticed going into this specific chart is the positive divergence in the RSI. So I'm pointing out that you can see a little bit of a bounce. The 200-day moving average, it is rising here. Now, a double bottom, this isn't technically a double bottom. A double bottom would happen if we cross above this, and then you would measure move back up into here. So this would be the early stages. However, from this kind of pivot area where we started to see weakness, I anchored a volume weighted average price there, and you can see price held as resistance. It broke down further, and when we got above it, you can see it's right here and it's starting to turn up. So my thought here is, if you were to enter early, this would be the ideal level area kind of zone for risk. And you'd try to play it back up into here to potentially even a full measured move, which would be obviously really good. So what I would like to see is price action consolidate, hold above, no close below this line, and us to get continuation to retest this prior area of resistance, maybe even consolidate up there to add to the position if it's just a starter position, and then go from that point. So that one's setting up pretty nicely. All right, the last one I want to talk about is AMSC. This is American Superconductor, and this falls within the technology electrical components category. And another little call out here is this double bottom. I can call this a double bottom now, as we had a positive divergence here. We had pretty much matching low. It did wick lower, but you can see we actually closed lower here, and we opened over here. So this would be technically, I would consider this a positive divergence. And then we did break above this swing high. So a measured move of this would take us to and around 27.28. And we did recently kind of flag out here. And as we flagged out, we broke out and started to see some pretty decent volume come in. This last day was an inside trading day. So I'd be looking for a break of this high, right? I would like to see it consolidate even tighter, but I'd want it to really kind of hold this 23 level or the low of this candle right over here. And then I would try to play it for continuation up to and around 27 to 29 into and around that area. That's all I got for you on today's episode, everybody. Hope it helped out, gave you some insights into the markets. See you later.